A warm welcome to you. My name's Charlie Burton. In conjunction with Tickmill, we are indeed running live here today. We've had some technical issues, but we are running live here. The sound's working and the chat, I believe, is working now as well. So we're running live here for live analysis. If you have got questions, by all means do put them down. This is live analysis, live and live chat as well, and live trading. I've got a trade lined up here to place here this morning. But first up, just a risk warning. Anything that I do, any analysis I do, or any trades that I take should not be deemed to be advice. They're purely what I'm doing. I am an authorized money manager here in the UK, but nevertheless, what I'm doing here when we're doing these live sessions should not be deemed to be advice. I'm going to be showing you what I'm going to be doing here on the Tickmill account here this morning. But before I do that, we just need to have a little look at a recap of some of the trades that I've already executed in previous sessions. So let's come over to the euro dollar first of all. So looking at the euro, if I just pull this out, a few weeks ago, one of the previous sessions, we placed an order. I placed an order on the Tickmill account, and I'll show all that in a moment. Here at just about 112. So these were the prior highs from September, October time of last year, which we'd broken out of, and we were looking for price to come back into that. Really simple breakout and pullback type stuff. The thing in the markets, though, is although that as a concept is quite simple, it's always down to, well, how wide do you have a stop around that? How much room do you give it? Because these things are never a perfect science, because if we go forwards from here, we'll see that actually the euro went down through 112, actually came down to below 111. So I could have got, in theory, an even better price. But we never know that in advance, and so I wanted to allow for price to have a bit of a wiggle around those levels. So that's what I did, and if I take it forwards since then that's where we are right now. So let's have a look at the Tickmill account. So this is where the long was executed. Has it got the date on there? Opening time, yes. So it was on the 9th of May that it got filled. There's the arrow there. Got filled on the 9th of May, and at 112.04. It's got a stop loss at 110. We're going to adjust that, and it's got a take profit at 119. Okay. 119.80. So let's go and have a little look at all of that. So the account now is sitting at 30,300 or so. It started at 30,000. So let's just minimize that for now. First things first, the euro has already started to rotate off of this low down here. So that initial stop loss was there to give it that initial room whilst it's in the declining phase. So while it's in the declining phase, it can spike around. So I'm allowing that little bit of space there. So now I can certainly move that stop up essentially to that low there. Hit modify. There we go. Let's get rid of that. There we go. So the stop has now been moved up to essentially that low. Now, as you've just seen, the profit target, the take profit, is up at 119.80, and so it's a long way away. So this is more positional trading that we've got going on here, because I wouldn't expect price to go to 119.80 in the next week or two. It's a long way away. Mind you, with the recent volatility that we did have, then anything is possible, but I would expect it to take a bit more time. However, the euro could get back up to these highs in the next week or two. So the potential is to do that. So somewhere around the 116 is I'm going to be sitting at 1 to 2 risk reward at that point. So I reserve the right to bank a partial take a partial profit at that stage. So maybe I'll take a third off. I think I had 0.15 of a lot there. Let's go and have another look at the actual position size there. So yeah, so it's 0.15 of a lot here on this account. So I may take, let's just minimize that. If we can get up to 116, then I may well take a third off. And then just run the rest up to that 119.80. The 119.80 is really based out on the monthly charts. It's essentially this monthly 200 moving average. It's a historical prior support zone as well, which becomes resistance, that whole around 120 area. So that's the reason for the longer term target there. Okay, so that's that done. Not much more to do there. A couple of weeks ago, I did also take that short on the pound. Where was it back there? So and again, it was just a divergence as the pound came up into its September highs of last year. There was a divergence on the small 1 hour chart at that stage, and that ran down as well and hit its targets that we had down there. So that was all, but that was, how long ago was that now? Yeah, nearly a month ago that we did that. Right, so, but let's bring us back to today. So, okay. As far as the euro's concerned, before I move on, or in fact, actually no, let's do this. Let's add an order to this euro trade, okay? So if the euro can get through 113, about 113.20 or so. So if we can get to 113.30, that's comfortably above my moving averages here. So what moving averages do I have on? So the moving averages I have on are the 20 period moving average, the 50, the 100, the 200. So if we can get comfortably through that 20 here, yes, from a price perspective, we're just coming up into this price levels, but I'm more interested in the overall trend anyway, which is to the upside. So if we start rotating back into this, I'm not that concerned about that. So what I'm looking at doing is adding to this existing position. So I've already moved the stop up a bit. So the stop now was originally $300 of risk, and it's now only $200 of risk. So I could put a third of a percent, so 0.3% risk on a fresh trade if we get up to there. And at that point, I would move my stop. Actually, why don't I just make this easier? I'm going to move the stop just up to a little bit below that low of that reversal bar that we had last week. So I'm just going to do that. So it makes my job a little bit easier for explaining here. Okay, so I've just tried that a bit more. So I've now only got essentially it's saying 0.93. That's not, I don't know. Yeah, that's not right. So essentially $156. We've got a $30,000 account. So I'm essentially at about 0.5% of risk right now. So that's it. So if we come back down to the bottom, so the stop should be showing there. Yep. So it doesn't actually show down the bottom what the open risk is, but that's fine. And this, when I put my cursor over there, it's not actually showing the current open risk. So, but that doesn't matter. We know the account is 30,000, and right now it's only risking 156, which is 0.5%. Okay, so I'm going to now place an order to buy the euro if it can get up to 130.30, and so adding to this trade. So I've already moved the stop up, so I've now only got 0.5% of exposure. So I can now add another 0.5%. That's why I thought I'd move that stop a little bit more just to make things simple. So I'm going to add another 0.5% of risk. So it brings me back to a total risk of about 1%. However, I've got a bigger position size on. So still only 1% in total risk if this gets triggered, but I'll have a bigger position. And that's what I'll do with this and just add. Right, so let's do that. So let's click on the buy button. So we're going to do a buy stop, and it's going to be at 113.30. So you can see roughly where that comes in. Now, for some technical traders, they wouldn't want to buy there because they'd be looking at this as a cluster of resistance, and it is. But I'm looking at the bigger time frames. By the way, do ask questions if you've got any questions, because I will answer them if you do have any questions here, and we'll just keep going here forwards and looking for other trades as well. So I'm putting this one in. I've got another market that I want to take a look at. I want to take a look at the S&P as well, so do stick around because I'm looking at that one as well. So yeah, for me, it's all about the bigger picture, the top-down analysis that we did previously. So that's why I'm targeting what? 119.80 overall. So for me, this is a pullback, and if we do rotate back up to there, then yes, it deserves an add-in. Right, okay, so 113.30, let's put a stop loss against that. Where do I want to have a stop loss? Well, if I'm going to get in here, I still need to give it enough wiggle room. So realistically, the stop needs to be around that 111 zone still down here. So let's put in 111. Actually, is that going to be too far away for a lot of people who are watching? It is. I'll keep it to 200 pips. So 111.30. So it's a little bit arbitrary, but I know that people are looking at it and saying, oh, these stops are too big. But that's swing trading for you. They're not. They're just, it's all good risk to rewards. But so that's where I'll put the stop at this moment. And let's change the risk because I want that to be 0.5. Oops. Okay, so it's now telling me that we're risking $140, correct? If I put this in, and it's saying that it will be 0.07 of a lot, and if I place this buy stop, and the stop loss itself is going to be just a little bit above the other stop, so far enough away to give it a bit of room here. Now I could be more aggressive with the stop loss, but I always want to give him a bit of room. Still, the risk reward overall, if on this position we go from 113.30 to 119.80, there's still loads of space on that as far as risk reward is concerned. Even with a 200 pip stop, I'm still getting in at 113 to go to 119. That's 600. So we're looking at a 1 to 3 risk reward on that, and that's just on that. So let's put this in 113.30. 0.5% risk, so it's going to, okay, orders in. So I've now got an order there to buy, the buy stop further up there on the euro, only if it does go up that bit further. So the nice thing is it compounds the trade. So I could just stay in with the original position, and if it carries on running up, it ends up being, yes, a nice trade. But the ability to add into trades, once the stop loss on the existing positions can be moved up, like I've already done, means that I'm not taking on any more risk than I had at outset, which was 1% of the account. So if this triggers in, again, all it will be is 1% of the account. But I've now got a bigger position size because that's only because we've managed to move the stops. So I've now got a bigger position size, which means the overall profit potential is that much bigger. And I'll continue doing this if the euro does move higher, although I may reserve the right to bank a little bit, take a partial profit of the original, but I'll still be looking at other opportunities to add in to the euro along the way. So what happens is you compound the trade as the market runs higher. It may do future pullbacks as well, and it ends up becoming a far greater than the value of its parts. So if I just took an initial trade a vanilla trade at the beginning, then that's only, oh, thanks Evie. I think Evie's put some questions down for me. I'll check those out in just a second. So it enables me to make these bigger overall compounded trades. So what would otherwise just be off the original trade, getting in at 112 and running it essentially to 119 with a 200 pip stop loss. Well, it was 119.80, so we're looking at roughly 800 pips, just under, risking 200. That's a 1 to 4. But by adding in, you're essentially building more and more and more, and you end up, that's how a 1 to 4 trade becomes a 1 to 10, or ultimately maybe even a 1 to 15, depending on the price action itself. So that's what I'm going to be looking at there. I'm just going to check out your questions here. Fix the mic. Yeah, you can't. Yeah, none of you I could see at that point. So they're just the prior ones. I think we're all good now. Right. Okay. So few apologies about the sound there earlier on. We're working now. Okay. We have been for a while. Okay, so that's quite interesting there. So what's going to happen is if we trigger in on this trade, the position at the moment is already here. So we've already got the existing long position down here from 112. But then it'll add to that along the way. Oh, by the way, the history, where's that pound trade? Down here somewhere. Yeah, there's the pound trade down here. That was from a month ago. Yeah, okay. So it will add to that one. Okay, let's get rid of that. And at some other point, I'll probably add in again, and so on and so forth. So at points where I can move my stop loss up on my existing positions, it allows me, because I've reduced the risk on the existing positions, it allows me to then add fresh positions, which is exactly what I've done today. So I've reduced my stop to only being 0.5% of the account. So I've only got $150 of open risk. And now if we do go up, then it will then add another 0.5% risk. And then gradually as we move higher, then I reserve the right to be able to add again. So on the next sessions, we've got another webinar coming up. We'll just double check the date here for you. It's on Tuesday the 3rd of, so do put it in your diary, Tuesday the 3rd of June. So that'll be the next live analysis and trading session. So we'll see how these are getting on then as well. But I've still got another trade potential here this morning. So we're at 8:30. So let's see if there's any. I don't think there's anything more to add there on the euro. I'm having to repeat myself because to some people this is brand new stuff. This whole adding in the concept of making sure you have to reduce your risk on your first position first, and then that enables you to add in. So we're not actually increasing the risk beyond 1% of the account, but we can carry on doing that into the future potentially there. And I have to say potentially because it does depend on the price action. Yeah, okay. Right, let's come over to the S&P here this morning. So something entirely different. And so what's interesting on the S&P? Okay, I'm just going to fatten this up a little bit and just bring my pen up, because over the past week or so, the prices have been moving higher, but I could actually draw an arc over those highs there. And in fact, if I bring this to maybe a 4-hour chart, we might see that just a little bit clearer here. So first up, we've got I can start drawing an arc. So the potential is there for what? A rounded top pattern. So a rounded top potential. So and a rounded top is just that. So price arcs up and then gradually it starts to roll over, and there's our rounded top. So just a fairly regular technical chart pattern, I often talk about things like, I call it marginal new highs as well. So a marginal new high is when we make a high on whatever time frame. This is just on a 4-hour chart now of the S&P, and then price pulls back, and then price comes higher, but it only marginally goes higher before it does its next pullback again. And then it comes back up again like it's done so far, and it's already starting to potentially pull back again here. So we start seeing this pattern of marginal new highs where price does make new highs, but it doesn't extend the run very far at all before then retracing again. So we're in the what potentially could be a rounded top pattern along with those marginal highs, and coupled with that is this divergence pattern down here on the MACD. So that's on the MACD lines down here. So let's just zoom that in a little bit and have a look at that. There we go. So not only is it a divergence, it's what I call it, it's a double divergence. So we've got our point 1, which is here, and likewise that couples up with the high here. Okay, then we make a new high, so we'll call that point 2, and we've got a lower high here on the blue line. We're looking at the blue line here, the main MACD line. The yellow line is an average. And then we've made a new high here at point 3, and yet the MACD is making another lower high at that point. So we've got this overall divergence going on here. So funny enough, it was a divergence pattern that I was trading a few weeks ago. So I think it's got some scope. We're probably in this hour, probably a little bit early at the moment. I would like to see a little bit more weakness to come in. We've had a red bar, so it's okay. I would just like to see a little bit more. Why? The reason why is that from a purely technical perspective, there's not a classic. I'm looking at the daily chart first of all. There's not a huge amount of resistance here. So overall, I think the S&P has got the scope to go back up and challenge those highs. But that's not what this trade is about. It's a 4-hour time frame, just looking for an opportunity on that time frame. So it could be that the S&P pulls back a bit, enough for that one to hit its target. I'll talk about that in a moment. And then still we go higher. So I just want a little bit more evidence, if you will, before entering a trade. So it looks like I'm going to be placing an order here this morning on that one as well. I'm just going to double check the weekly time frame. Yeah, there's nothing there on the weeklies particularly either. So it's certainly going against the momentum, so to speak, overall on the daily charts. But if we did have a little bit of a pullback, then it wouldn't be bad. So let's go and have a look at that. Yeah, okay, thank you for that. I can see that someone said, can you look at gold? But you need to give me some context. Gold in what time frame? You know, what's the context there is what would be useful. So I can have a look at something like gold, but yeah, we need some context. So because someone might be saying, yeah, I want to look at it on a 1-minute chart, and someone else might be looking at it and saying, oh yeah, but I want to look at it on, you know, actually it's a daily chart. So for the person who's asked about gold, yeah, by all means, do qualify what you mean there. Right. Okay. So I'll look out for that if there's a question comes through on that. Okay. So let's go back to the 4-hour chart. So I think it needs just a little bit more of downside. So let's come down to the hourly chart. We've got the divergence and we've got all of that. Yes. Okay. Well, let's see if the S&P can break down below this lows of this morning. If it breaks that, then we're probably going to come lower on the hourly chart. So that is around about 59, we'll call it 59, or what actually is it? The low was 59.38, so let's call it 59.30. I'm not, when you're intraday trading, every point in the S&P matters. Swing trading less so. So maybe 32. I'll put an order in down there because ultimately I'm looking to track this down to roughly where the green line is, which is my 100. That will be my target for this. So there's plenty of risk to reward on it. Stop above the high if it does trigger. So around about 59.80. Right. So let's get this set up. First things first, yeah, 0.5% risk. Good. Let's put the stop loss in. 59.80. So that immediately just confirms, yep, we're risking about $150. So 0.5% risk, just around that. If I was to take it now, but I'm not. I want to put a stop order in. So at what price? 59.32. Okay. So 59.32 with a stop loss at 59.80. Let me just double check that. 59.80. Okay. 59.32 stop. So it's a 50-point stop. How far away is that target? It's down at 50. It's down in the 5700s. Let's assume it will end up being at around about 57.50. So let's put that in. So there we go. So the risk to reward is about 3. So that's quite nice. So it all looks pretty reasonable there. So double checking it. So it's a sell stop to trigger me in below current price at 59.32. A stop loss at 59.80, so just above the high. So if it triggers me in, then I'm looking for it to work its way down to there. And then I'm going to put that order in. There we go. So, and that's all based on the potential rounded top pattern, the double divergence going on down here, the marginal new highs as well. If we come out to the daily chart, certainly the scope for a little bit of a blip there to the down and a little bit of a pullback is there. I'll have to manage it a little bit. If it does trigger in, because there is some support I can see on the daily chart around about 5800 as well, so I'll have to manage that trade a little bit over the days ahead. So it's still a little bit of a short-term swing trade, so no intraday trades today, but certainly trades going on. Okay, I think that's about probably enough at this stage of the day. If there are any more questions, the problem is I'm reliant on some screenshots being sent through to me, and I'm not sure if Evie's about or whatever. Well, I'll just wait for a minute here to see if there's any more questions. But I do hope you're enjoying these sessions, these live sessions. I've done a lot of educational webinars with Tickmill over the last 2 years or more. But it's really nice to do some live trading and live analysis sessions. So I hope you're enjoying these. If you've missed the other one, the 2 that I've already done, where I did the cable trade, that was about a month ago, and then put the order in on the euro as well. And now seeing how these are playing themselves out, like with the euro there, putting an add in if the euro breaks up. Lots of trading, but not having to go and look at 100 different markets to find trades because of the nature of getting into a trade and then saying, we could add to this. We don't have to look at other markets for other swing and position trades because I can look to add to that as well. So I do hope that's been of use to you today. If I've missed any questions, I haven't seen any more questions coming through. then I do apologise because I'm not unfortunately privy to seeing them live here this morning. We'll get that fixed for next time. I did see them last time. It's something that I've not done. So let me just double check. Yeah, no, I still can't see anything with regards to the chat, unfortunately, today. So, and I'm not seeing anything more coming through. So, on that basis, is there anything more to mention? No, in conjunction with Tickmill, I hope you're enjoying this series. We've got another one coming up on the Tuesday, the 3rd of June. We'll be doing more analysis and looking for fresh trades as well. Sometimes it could be an out and out intraday trade, and other times it's a bit like today, putting in some orders on some, whether it be a shorter term swing trade like that S&P I've just done, or a longer term swing positional trade like I've just also done with the euro dollar there. So I do hope that's been of use to you. Have a lovely day. My name's Charlie Burton. I'll see you soon.